Hello and welcome to 3.0 TV. I'm your host Vishaka Thakur. And in today's special segment, we will see how regulators across the globe are moving closer to crypto regulation on the back of the fall of FTX and prolonged crypto winter last year. The first major regulatory update comes from the European Union. The recent approval of regulation on markets in crypto assets by the European Parliament marks a significant milestone in the regulation of crypto assets industry in Europe and beyond. The regulation also stands out as the world's first legislation of its kind and sets a precedent for other legislations around the world to follow. There is big news from the future crypto hub of Asia, Hong Kong too. From June 1, Hong Kong plans to start a new licensing regime for crypto service providers, thereby allowing investors to trade major cryptocurrencies such as Bitcoin and Ethereum. As Hong Kong gears up for becoming the crypto hub of Asia, regulators have issued a warning that crypto firms should not expect any additional favors or leniency in the regulatory approach. Additionally, Hong Kong regulators are also working on introducing a licensing regime for stablecoins due by 2023 to 2024. With this legislative framework, we expect more transparency in Hong Kong's regulatory framework.
I think we should cast the net wider. It's not just crypto, but I think virtual asset. And similar to many things in the world, there are two sides to it. On the one hand, there are positive sides to it. In terms of the underlying technology, you talk about blockchain, where without intermediaries, the process of transmission or payment is actually seamless. So in that regard, there's a reduction in transaction cost in terms of many things that we do, not just in the financial world, but also in the trade world or in other areas of the economy. So, but on the other hand, because of the anonymous nature of these transactions, they are susceptible to money laundering or terrorist financing. And if you actually look around the world, many different jurisdictions are looking to see how they can strike the right balance in terms of extracting the positive sides to it, while at the same time minimizing the negative impact. Because after all, virtual assets, I'm sure all of you agree that it's going to stay. It's just how we should regulate it and also how we can make the regulation better.
The US, however, still lacks regulatory clarity, but states like New York and Montana rolling up their sleeves to strengthen crypto regulation. New York Attorney General Letitia James has already proposed landmark legislation to tighten regulations on cryptocurrency to protect investors, consumers, and the economy. The bill, dubbed Crypto Regulation Protection, Transparency and Oversight Act, would require independent public audits of cryptocurrency exchanges and prevent individuals from owning the same companies such as brokerages and tokens to stop conflicts of interest. The bill would also boost investor protection by enacting and codifying Know Your Customer provisions and banning the use of term stablecoin to describe or market digital assets unless they are backed 1:1 with US currency or high-quality liquid assets as defined in federal regulations. As far as Montana is concerned, miners out there are relieved now that the government has brought in a law preventing local authorities from issuing discriminatory regulations against them. Montana's broad-based right to mine bill encompasses sectors such as energy, local government taxation, besides touching on digital currency taxation when used as a means of payment, a move hailed across the local industry. The law bears a striking similarity to legislation passed by Arkansas that grants digital asset miners the same rights as data centers. In India, the Reserve Bank of India and the Bank for International Settlements have announced the start of 2023 iteration of G20 Tech Sprint to find innovative solutions for cross-border financial transactions. The core focus of the competition is the trio of foreign exchange liquidity, anti-money laundering actions, and central bank digital currencies with cross-border functionalities. Applications for Tech Sprint will run until June 4. with participants expected to submit solutions to one of the 3 areas of interest. A pool of experts will review the submitted applications and contact applicants with innovative solutions by June 30. Shortlisted finalists will receive $10,000, while winners in each of the 3 main areas of interest will receive up to $50,000 each. This apart, the shortlisted participants will have a deep pool of experts to offer technical assistance in fleshing out their solutions. The official document suggests participants will have the opportunity to interact and work with Indian authorities involved in regulating cross-border payments. Well, that's all in today's special segment. We will meet again. Till then, keep watching 3.0 TV. And do like and share our videos and subscribe to our channel. This is me, Vishakha Thakur, signing off.